Hey everybody, I'm David with Bolivar Live, and once again it's real estate talk. And we've got a little different show going on going into the end of the year where we're going to have some guests. And today we have Skylar with Legend Home Lending, and we're going to talk a little bit about home loans, what you need to do, when you need to do it, and how you do it. We're going to cover the different types of loans, pre-qualifications, cost associated with the loan, minimum score credit scores, interest rates a little bit, but probably not a lot, buy downs and more. And so Skylar, I'm a new home buyer. What do I need to do?
So the first step is to start with an application. So
Okay. Even before we go to Norma looking for a home.
Correct.
Okay.
Correct. You always want to get pre-approved to be sure that, one, you're looking at a comfortable price point. You understand what you can expect your monthly payment to be, cash to close. So the first step is always to get pre-approved with a local lender. It's very important to get approved with a local lender because
local.
Yes,
Local.
very local. And the reason is because you want to be sure that the person working on your home loan, the person working the numbers, is familiar with the taxes, the insurance, what they can expect in certain areas in greater Houston, Galveston County. Those can vary.
Yeah, because buying a home down here versus Colorado, it's night and day.
Correct.
Yeah.
Correct.
You know, especially with insurance.
Yes.
Norma, as far as when someone comes to you and they say, hey, we're wanting to buy a home, and you say, are you pre-qualified? They say, well, we haven't got there yet. What do? Do you tell them, hey, it's really good to get pre-qualified? And nowadays, you really need to be
Yeah,
pre-qualified.
because if you're not pre-qualified, you have really no idea what price point of a home to
Right.
look at. And so you're wasting their time, my time. So I immediately tell them, let's get with the lender. Let's discuss all the stuff that you need to discuss about a loan. And then we'll look.
Because a mortgage company, what the home buyer thinks they can afford and what a mortgage company thinks they can afford is
Correct.
probably two different things.
Correct.
A lot of times.
Yes.
So we've gotten pre-qualified, but what's other costs are there associated with buying a home?
So you're going to have your down payment, and so most people think that you must have 20% down. That is false. We go as low as conventional 3% down for first-time home buyers. We also can do FHA loans, 3.5% down, and so we can look at what those incentives would be for those buyers. We do need to allocate for closing costs as well. So that's something that is a little intangible without talking to a lender. So you're going to have your 1 year of homeowners insurance, some escrows, so your taxes and insurance go into an escrow account, and then there's going to be onesie, twosie fees, title, attorney, doc prep, things like that, that appraisal, survey, all of those need to be taken into account, and those also matter on the area that you're going to be in. Surveys and appraisals can vary across the board on that. So setting that expectation up front on what you can expect your closing costs to be on top of your down payment, and it also gives the realtor an idea of what we're working with, if they need a little bit of assistance in seller contributions, or if we need to kind of work with the sales price to make the deal work. It's very important that we're all on the same page when it comes to cash to close.
And just working with Norma a little bit, people don't realize what realtors do to make packages go together.
Right.
Yeah.
You know, whether it's going back and forth with the other realtor, working on pricing and all that. Interest rates and locking them. Can you do that? And then also, there's several different types of loans. What kind of different types of loans are there?
So we, at Legend, we do a lot. So we do your standard FHA, conventional, VA, USDA. We do down payment assistance. We have a really, really great down payment assistance program where the assistance is a second lien only on the lien amount. So just for simple math purposes, let's say it's a $200,000 house, they can get up to 4% of that, so $8,000 toward their down payment and closing costs, and the higher interest rate for that second lien down payment assistance is only on that $8,000, not on that $200,000 property. And so that makes a big difference in the monthly payment for the buyer. It helps bridge the gap. It allows them to qualify for more home versus T-Shack and SEP and some of the other DPAs that we used to do. We also do bridge loans, which are really great in this market, especially with sellers who may see a property that they have to have. It's on their street that they want, it checks all their boxes, but they haven't sold their home. They can go and pull that equity out of their current property to purchase the new one. We're also doing land loans to custom home construction loans to permanent financing. So that's really big in this area. For vacation homes, you can pull equity out of your current property that you wanted to sell and put it toward that purchase.
Is whenever you're doing stuff like that, is that something, Norma, that you get involved with? Or is that mainly
Yes.
between the customer and the mortgage company?
Oh, no. I mean, as realtors, we communicate all the time with lenders. I mean, it is trying to think of the right word, but I mean, we have to work very tightly together to get the buyers where they need to be.
Right.
And so if it's not communication, there's no communication, it's kind of.
It has to be cohesive. We all have to be on the same page to
Right.
make sure there's very clear expectations set.
Great,
Right.
great. Let's talk buy down.
Okay.
I just learned about it in the last year and a half, and I'm infatuated because
Right.
I'm
He
really
talks about it, I'm going to say he talks about it all the time.
I'm really
All the time.
surprised
It's
people that have the cash don't, especially with interest rates had gone up.
right.
I'm really surprised more people don't take advantage of it. Is there a pro and con about doing that?
There are. So it has to make sense for you as a buyer, and it depends on what you want to do with the property. So if you're going to be in this property for ever, until the loan's paid off, then it may make sense for you to buy it down. If you're like, hey, we're only here for a couple years, we need to look at the break-even point of that cost investment, because there is a cost to the buy down, and if you're not going to
Keep it
surpass, so I mean, let's just say, I would need my calculator, but let's just say to buy your rate down, it's like 0.5%, it's 10 grand. Well, and it's going to save you $350 a month. Well,
How long do
depending
you
on
make
that
it
break
up?
even point of the cost investment, that the amount of years is going to make or break that
Right.
transaction. So a lot of times the buyer doesn't know, and so if they know, great, let's go for it. But we're also in a declining rate market right now, so it's kind of like, well, let's kind of just watch it and see
And
what
knock
happens.
on wood,
Yeah.
hopefully it stays at that.
We're on
Yeah.
the descend. So we're slowly getting there. But yeah, so it just depends on the client on what's going to make sense for them. And we do the break-even cost investment, especially when it comes to even a refinance, because if it's not going to make sense for them because there is cost to refinance, and if they're not going to see the cost investment to utilization, then there's no point in doing it.
Right.
Okay. Let's talk about documents. Whether you're buying or selling, you have to have certain documents, whether it's for your house, if it's a new home.
Right.
Norma, from your standpoint, what documents, say you're listing a home, what documents do homeowners need to have?
Well, it's nice to have the existing survey, and if you've done any changes to the property after you purchased it, like a swimming pool or a concrete patio, whatever, that survey is no longer
Good.
you can't use it anymore. Yeah, so but a survey is good. It's not quite necessary, but it is required for the new buyer, because if they're getting a loan, they're going to need a survey. If they're paying cash, they won't need one. But so the survey is one thing, and then kind of draw a blank here.
Sometimes it helps to have a copy of their insurance policy, just so that we can set the
Especially down
expectation.
here.
Yeah.
Yes.
Some flood insurances are assumable, and so it may be very beneficial to the buyer, especially on a debt to income
Yeah.
ratio thing. So if they're grandfathered in at $1,000 a year and they get a new flood quote and it's $5,000 a year, like, let's try to assume
Right.
that.
Yeah.
And for the loan, I mean, You want to go ahead and get into that?
Yeah. I want people to know what
Right.
they need so
Yeah.
that they can get it done.
So
But for a seller, it's really just a survey. They have to fill out a seller's disclosure, and those documents are
Yes.
sent to the buyer. But there's not as many documents for a seller
as there is a
there
buyer.
is for a buyer.
Right, right.
Okay, from the buyer's standpoint, what do they need when they come to you?
So it seems like a lot, but when you break it down, it's really not. So 2 years tax returns, depending on how they're paid. If they're not self-employed or 1099, no K-1s, anything like that, 1065s, then we can really just roll with W-2s. So 2 years tax returns, 2 years W-2, 2 months bank statements, 30 days pay stubs. If they have bonus income or any overtime, we really want the last pay stub of the previous years to be able to average those, because any income helps when we're trying to get them qualified. Copies of their driver's licenses. If they own any real estate, we need insurance tax information on that. If there's a loan on it, we need to be able to get that information as well. But really from there, it's not too painful.
It's all computer stuff.
Right.
So, explain points, because that's something that I'm not real familiar with.
So that's essentially the buy down. So if most originators will throw a point in there. So when
Okay.
you're looking at an online estimate that, just something that's popping up on the side of your screen and it says, oh, here's your 5.75 interest rate, and it's like the shiny thing in the room. Well, if you go and look at the breakdown of it, usually there's points in there. And so again, it has to make sense for the buyer. Do we want to use, so a point is typically 1% of the loan amount.
Okay.
And so and what we have to look at the difference in the monthly payment. Is it going to make sense? Are the buyers cash to close conscious, or are they payment conscious?
Right.
If they're payment conscious and they, want to ride this out for a while, then I understand. Then let's look at points, and I'll give them options. I'll break it down by, each increment of maybe 0.25. In interest rate, and then if they're cash to close conscious, why would we throw $5,000 at that when the
Right.
wife wants to repaint the living room?
Right. Right.
So yeah.
Let's talk real quick about servicing the loan,
Okay.
because a lot of people don't know what happens to their loans.
Right, yes. So we do a pretty good job of explaining that to our clients. So we do sell in the secondary market. Let's say you close first of the month, you pay interest per day. For that month, you skip 1 month, and then your first payment is due. Typically in that time period, your loan is sold to the servicer. And so we have really excellent servicers. They get a notice in the mail, they get an email, and then obviously we're always available to help
Right.
them with that, and they can set up an online account. We do service some of our own things, like the bridge loans, the construction loans, anything that's going to be interest only. So we are a servicer as well.
Okay.
Mhm.
But when the loan's sold, they don't have to worry about interest going up
Yep.
or anything changing. The loan's
Not in-
as it was.
Right, if it's a fixed rate.
Okay.
ARMs are not as common right now, so we're really not doing a lot of those. So they just have to be familiar with their terms. So most of the mortgage loans that we are writing right now are fixed interest
Fixed
rates.
interest loans.
Yes, yes.
Norma, from a standpoint of a new homeowner or someone wanting to buy a home coming to you, what's some of the first steps that you take?
Well, like we just discussed, getting qualified. And then with new home buyers, I always try to get the criteria that they're looking for in a home: bedrooms, bathrooms, kind of their must-haves and their dreams, what they want. And so, but I always try to look for homes that are in a decent tax rate, and because people don't realize that that will affect their payment. And then I also look for homes that are in a lower HOA, monthly, or
Homeowner association?
I would say monthly, but that's like a condo, but a home would be an annual
Right.
HOA. So, but yeah, we have to have these discussions, but it's figuring out where they want to be, and then their criteria, and then just making sure that they're aware of what the fees are, what's involved not only just the principal and interest of the loan, but the insurance, what the insurance is going to cost, where they are. If you're closer to the coast, obviously you're going to have flood
Right,
insurance
right.
and that kind of thing. So you have to educate people on all these different things. So I enjoy doing that. My favorite people to work with are first-time home buyers
Same.
because they don't know, and I love educating them.
Right.
It's so much
exciting.
fun. It is.
Well,
So-
especially whenever you let them know you have the loan and you're there at the closing, you know, and they sign the papers on their first home. They're
Right.
getting their first home
Yes.
and starting the rest of their life.
Well,
So-
hang on. They get excited when their offer is accepted.
Right.
Oh, is
That's
that the
huge.
champagne bottle?
Yes, yes,
Fun
yes,
size, yes.
yes.
real quick on, so they found a home that they want, but they're off a little bit. Either the home maybe not appraised exactly what they can get the loan for.
It didn't appraise for the contract amount.
Right. Is there a way to work with that? Does the realtor have to go back and forth to the seller, to the mortgage company to see what they can do to make it work?
Yes. So typically, when the home does not appraise for the contract amount, you will go back to the buyer's agent, or excuse me, the seller's agent, and we negotiate new
Okay.
terms, whatever. So yeah, and hopefully the
They
seller
can-
will come down. Sometimes you have to meet halfway. They may have to bring money to the table, or they may not come off at all, and you have to bring all of the difference to
Right.
the table. So, but
Right.
preferably, if you're in a buyer's market, they'll
Yeah.
be coming off the price.
Right.
I've got approved for a loan. How long is that pre-approval good for?
120 days.
120 days, and then once the loan's approved, how long do you have to close? Is there a time frame where you have to get the loan closed?
There is, and that's the closing date.
Is it?
Yes.
And the contract.
Yes,
Okay.
it's contracted. So we have that amount of time to figure it out. Usually, the way that we want it to be is that they are pre-approved before they're under contract. They know what their monthly payment is going to be and what their cash to close is expected to be. So that there's no surprises at the
Right.
closing table. And then it does help the realtor when the appraisal or an issue does come up, and to know what we have to work with and how we can leverage those funds. But the biggest thing, especially in this market, is monthly payment. Are they comfortable with the monthly
Right.
payment? We don't want to waste anyone's time. We want to make sure that everyone
They
is
feel
on the
good
same
going
page.
into it.
Right, right.
Yeah.
I talk about local a lot, and whether it's a realtor that knows the area, that knows the different subdivisions, or it's the mortgage broker that knows the area, whether it's the coastal region, the Houston area, but to go online or to go to Oklahoma or Colorado to get a mortgage company, to me, they really don't know what they're working with.
No.
And down here, there's no place else that insurance, taxes,
Yes.
and mortgages work the way they do on
Yes.
Bolivar, from what I've learned. And
Right.
so make sure, one, you work with a local agent, two, you work with a local lender, because it's a whole lot easier if they understand the area you're in, the insurance that you have to have, and all the stipulations on getting a home on Bolivar Peninsula. For more information, make sure you give Skylar a call at Legend Home Lending. How can they get hold of your website they can get more information?
It's www.loansbyskylar.com.
Great. Or if you're looking for a home, ready to sell your home, make sure you give Norma a call. And what's your phone number?
281-802-4927.
Great. Well, y'all, thanks for joining us. This is a wrap on another real estate talk, tongue-tied. We'll be back next Monday with another show, and I think we're going to showcase a home here on Bolivar Peninsula. We're going to head on out. Until next time, I'm David with Bolivar Live. Y'all have a great day, great week. Come see us. God bless, and bye-bye.